We are live. What is up, everybody? Spencer Israel. Welcome to another episode of What the FICC. Let's bring on my man, Ian Culley, head of FICC, fixed income, currencies, and commodities at All Star Charts. Mr. Culley, last I saw you, we were living it up in New York at the CMT conference.
I know, what an unforgettable event. It was absolutely amazing. We're hanging out on the floor of the New York Stock Exchange, meeting the legends of the industry, making new friends. It was amazing.
It was a tremendous week. It was also an exhausting week. I'm very glad to be back home. I'm sure you are as well. And we can get back to what we do, which is look at the markets and look at the charts. So, of course, this is What the FICC, the show where we look at fixed income, currencies, and commodities. Let's get a recap going here of what is actually happening in the markets. Let's bring your charts up on the screen. We've got gold first up on the list. What's doing in gold right now, Ian?
Gold, challenging new all-time highs. And I wanted to show a zoomed out monthly chart to kick things off. We just got some fresh monthly candles, and you see these red arrows at the top of the screen here. They're highlighting this area of resistance around 2000. You see these long wicks, these monthly candles with these long upper shadows, just highlighting that resistance, that supply, and the indecision and volatility that has taken place over the past couple of years at this level. Now, path of least resistance is higher for gold as long as it holds above those 2011 highs highlighted here around 1924. As long as it's above there, I like it long with an upside objective around 2,500. But first, we got to take out those highs from last year and 2020.
All right, let's go to move away from the futures and do some equities here. We have GLD or here we go. GLD. What do we got?
GLD. So the level in GLD is around 185.50, and it's trading above 185.50 today. So again, I like GLD long towards 238, 240. And then the miners.
Yeah, miners. Yep.
Miners broke out last month, have pulled back on a potential successful retest around that 33 level, and they're ripping higher today. We'll see what the Fed says. But they are catching higher. As long as GDX is above 33, I like it long towards those 2022 highs. Last year's high around 41.50.
All right, well, let's touch on crude oil quickly, and then we will elaborate more on it later on because it is the theme of today's show. But just real quickly, what's up or what's down, I should say, with crude?
Exactly. What's down with crude? Crude's been falling off the cliff past few days, back below those prior cycle highs from 2018. You see that highlighted here. So below 76. Nothing's good is happening for crude oil and energy in general if crude's trading below 76. For the ETF, the US oil ETF, USO, my eye is on 58, that 58 level. If USO breaks below 58, path of least resistance is lower. Risks are to the downside. So what does that mean for energy? I want to check on XLE here. XLE coiling over the past year. Right. So which way does this consolidation resolve? Well, if crude continues to drop, crude continues to roll over, I don't want to make the bet that XLE is resolving to the upside. It's most likely it's most likely breaking down. But what's been interesting over the past several months, almost a year, XLE has remained, those energy stocks have remained incredibly buoyant as crude has continually fallen, has continually printed fresh lows. So we'll get into that later, but definitely something on top of mind right now as crude continues to roll over. Here we got copper.
Yeah,
Dr. Copper.
Dr. Copper, let's go.
Dr. Copper, again, coiling, as long as it's above about 330 level, which is just prior cycle highs from 2018. Gotta give copper the benefit of the doubt, kind of middle of that range between its 2011 high and those former 2018 highs. So it's in the middle. It's messy. but we do have some levels to hone in on the daily charts, right? Around $4. Now it's back below $4 today and turning lower. We want to see Dr. Copper futures reclaim that key level. Now, copper miners, again, very, very similar to the energy situation between XLE and crude oil futures. The copper mining stocks are much more buoyant. They're holding up. They're hanging tough compared to the underlying commodity. So in the middle of its range, on a break above
why do you think
46,
why do you think that
47, I
is?
like COPX, a copper mining ETF, long towards a target of 70.
Why do you think the mining stocks are holding up better than the copper futures market?
That's a great question, and it makes me believe that there's an underlying demand for these stocks, and that should spill over to copper futures, or more precise, copper futures should hang in there. I got a feeling copper futures are going to catch higher to COPX eventually, as long as it remains buoyant.
All right, moving away from the commodities here, let's just do some other parts of the FICC quickly. Look at some treasuries and look at the dollar. What's new in fixed income land?
Not a whole lot. It's a mess. Markets have been a mess. I think that's one thing everyone could agree on at the CMT symposium. Markets are a sideways, choppy mess. And look at this chart of the 5, 10, and 30-year yield. Trying to roll over here. Looks like the rates want to roll over. They just haven't, So, all eyes, are all ears on what the Fed has to say today. I'm sure that's going to definitely impact markets without a doubt. TLT, it's like it's carving out a base to me. In future, or excuse me, treasuries are catching higher today. So we'll see how they resolve here towards the end of the week after the Fed meeting. TLT above 110, I like it long with an initial upside objective around 120. Bigger picture, just the fact that we're talking about buying bonds again and adding them back into our portfolios is the more important point to take away from this.
I mean, people have been buying bonds. That's what they've been buying, right? For what, 6 months now?
They've been slowly accumulating. Yeah, but it's still, I mean, it's to see the bonds act as a safe haven after that most recent bit of volatility with the banks rolling over, with First Republic catching lower, and I mean banks are continuing to roll over today, and to see investors turn to bonds, specifically U.S. Treasuries, for safety is something that we did not see all of last year. So it's constructive. Sure. It's definitely constructive.
Yeah, well, last year was a bad year for stocks and bonds. Hadn't happened in worst year for stocks and bonds in 50 years. All right, U.S. dollar index. Let's work through this, and then we'll get to your favorite charts.
All right, dollar index. It's around 102, 101 level. This is a zoomed out chart here. Dollar pulling back. Is it just retesting the shelf of former highs from 2016 and 2020? Or is a pause in the downtrend? Or is it going to undercut these shelf of former highs and continue lower? I mean, it's a huge, critical piece of the intermarket picture. Dollar's been a headwind for over a year now for risk assets, stocks, and commodities. A weaker dollar will really, give stocks a boost, a much needed boost as they carve out tradable lows here. Here's the zoomed in chart. You see that violation of the parabolic trend line late last fall. Now it's digging in and finding support around 101. So sideways, it's been sideways for the past few months. A downside resolution below 101 would be huge for risk assets. Also notice, even though the dollar index is rolled over for, it's fallen, more than 10% from its September peak of last year, it never registered an oversold reading, never registered a 14-day RSI reading below 30. And if and when we get that reading below 30, that will be confirmation that the bears are in control and that the dollar is heading lower.
All right. Oh wait, did we get to UUP?
Yeah, here's your
Yeah,
UUP
okay.
level.
UUP.
UUP. Keep an eye on that 27 level in UUP. Below 27, and I imagine stocks across the board are doing well in that environment.
I'm just excited because I want to get to our next segment, which is Ian's favorite charts. So, Mr. Culley, what are your favorite charts in FICC land right now?
This chart has my attention right now. This is an overlay chart of the dollar index and Dow gold ratio. So stocks versus rocks. Now, dollar rolls over.
I like it.
Dollar rolls over. That investors are most likely being rewarded for owning rocks, right? And that's really kind of where my head is when I look across the commodity space. There's few commodities I like outside of gold, silver, even platinum and palladium. I like the way they look down at the lower bounds of their ranges right now. So this chart is at the top of my list right now. I want to see what happens with the dollar. It just hammers home how important the dollar is across the intermarket landscape. So with that in mind, I wanted to share silver. Now this is gold's crazy cousin, right? This is the high beta of the family. This is
I love that every time. I love that.
Yeah, right. And it is, you know, and I love trading this the silver. Now it's running into overhead supply that interestingly coincides with a shelf of former lows back in 2012. Right, so this is the polarity principle in action. Former support turning into resistance a decade later. So if and when silver takes out that 26 level, I think the next stop is around 30, and then above there 35. So silver could very easily be up around 35 later this year. Now, in the meantime, keep an eye on that 24.75 level, right? That's the line in the sand. Silver drops below 24.75. All bets are off. Gold's probably trending below 2,000, and it's messy. There's other places that we want to put our money in that environment. For SLV, the level's 2250. Keep that on your radar. 2250 for SLV.
All right.
Another chart I really like. What's that?
Yeah. No, this is what I was looking forward to because you know, I'm not the most. I don't. I have you. This is why I have you, Ian, to keep up with some of the more obscure markets out there. Gold, silver, oil. That's all good, right? Even like platinum and palladium. That's fine. I honestly wouldn't even know how to find this next chart that you're going to bring up on the screen. I wouldn't even know the symbol to look up. I wouldn't even know how to find it. Live cattle.
Live cattle.
Yeah.
How many people were out there on Twitter talking about live cattle hitting new all-time highs?
At least zero. I don't know.
They're out there. They're hard to find. But live cattle recently hit new all-time highs. And what's amazing is it hit a key Fibonacci extension level around 180 and stopped. And now it's trending lower. It's pulling back. It's around 160, 161 today. You know, I don't go around looking for red lights. I don't like looking for tops, trying to pick tops or trying to pick bottoms. It's not but we're at a logical level for live cattle to at least pause their uptrend. We're already starting to see it kind of pull back here. So when I look at the live cattle chart near term, if it breaks below 162, I think it could pull back towards 155, 156. You have a little bit the divergence here in the 14-day RSI, a bearish divergence in momentum. So that steep uptrend. I mean, look how many 1, 2, 3, 4, 5, 6, 7, 8 months in a row. You know, so price does not move in a straight line. And live cattle have been just ripping higher for almost a year. I think it's a good time to pause and pull back.
I know you're a charts guy, but is there any sort of like fundamental reason for this that you know of?
Fundamental reason why live cattle are ripping higher?
I mean, blame the supply chain. Is there,
Well,
you
I don't
know?
think so much supply chain.
I'm kidding. I don't know.
Yeah, it's inflation. I imagine, and I just imagine just inflationary assets are doing really well. And I still, I bigger picture, I think we're in the early stages of a commodity super cycle. Of course, we're not going to know that, until 5 or 10 years from now. But when I see charts like live cattle hit new all-time highs, it definitely piques my interest, to say the
Are
least.
are the cattle just being greedy and
Are the
charging
cattle
high,
being greedy?
charging higher prices, and they're passing it through to the butchers? I don't know. I'm just throwing ideas out here. Okay. So favorite charts, we had silver, we have live cattle, and there was one more, was there not?
I got one more for you.
Yep.
Coking coal.
Okay, no, time out. You're gonna have to explain this one to me, because I
Yes.
know there's multiple coal markets.
Mhm.
Explain what this one is.
Coking coal is a metallurgical coal, so this is used to for making steel, right? Think of it as creating industrial metal. So when I look at coking coal, it's more of, I look at it as base and industrial metals versus, say, energy, because there's thermal coal, right? And that's for heating. So China, the second largest economy in the world, still burns a lot of coal. So when I see coking coal roll over and see a massive bearish candle, this monthly candle here, makes me wonder, this doesn't support the idea of copper above $4. So it's just something I want to keep on my radar, something that really piqued my interest, looking over the monthly candles over the weekend, keeping an eye on coking coal. Same with iron ore, same with rebar. They're kind of stuck in the middle of their ranges, so there's really nothing definitive there. But to see coking coal back below 2017 highs, interesting, very interesting, to say the least.
I just want to mention briefly in the chat, if you have any tickers, any FICC based tickers, any tickers based on fixed income, currencies, or commodities, drop them in there. This is not really a stock show. This is a fixed income, currency, commodity based show. Let's move on to the next segment, which, away from Ian's favorite charts onto the sleepers. These are charts that are maybe will be upgraded to being Ian's favorite chart in a couple of weeks. There are charts that are maybe flying a little bit under the radar. And I know we're talking about uranium today, right?
Yes, we are talking about uranium. We're talking about URA, uranium ETF. It continues to find support. It's 2017 high here, around 1850. This might be the 2016 high. As long as it's above 1850, I like uranium long. I'm going to give uranium the benefit of the doubt. And part of that has to do with the strength in precious metals. Now, if precious metals, if gold's back above 2000 or back above 2100, if it's posting new all-time highs, if silver's above 26, running up towards 35, that strength is going to spill over into the periphery. And that periphery includes uranium. So I want to keep an eye on uranium. I think uranium, URA, you head back up to 55 and even higher in this bull run for precious metals, if and when we get it. Zooming in, it's a mess. It's a mess. But more precisely, if and when it takes out that 2150 level, I like it long with an initial target back up towards the highs 2021, around 31, and then a secondary objective for around 40.
But that support level is the critical level right now.
What's that?
That support level is more important right now.
That support level is more important right now. You can call it 1850. I give it a little bit more room down here around 17. Let's call it 17.
Is there a favorite uranium ticker, or maybe not favorite, at least one you have, like a stock? I mean, a uranium stock you have on your radar?
Absolutely, CCJ. Okay. CCJ is the primary component of URA. That chart here. Here we go. Keep coiling. Look at this. This looks great. This looks great. I love the way this chart looks. It recently hit overbought. I really like CCJ. You can either trade against the 22 level or wait for a breakout. I prefer to wait for a breakout. I like it long above 32.50 with a target near the 07 highs around 55. Couple ways to play uranium there.
That's interesting. I'm looking up right now what the weighting is. I'm just curious because you don't often see. So you said CCJ is the top weighting of URA, right?
Yes.
All right. So how much of the fund is it?
I'm guessing something like 30% or something close to 30%. It's at least a quarter. 20%.
It is 18%. But regardless, how often do you see, if you want to just go back and forth between the two charts, how often do you see the ETF doing one thing and the largest component of the ETF doing something that looks completely different? Because that's what's happening here.
Rarely. So the strength in the largest component, the strength in CCJ here, just speaks to an eventual upside resolution for URA. That's the way that I see it.
Sure. I'm with you. As long as CCJ keeps doing what it's doing, then URA kind of at least a portion of it has to go up, right? So it just acts as a booster for the overall fund. All right. Let's keep moving here. I want to get to oil. We teased it earlier. This is what's on your mind.
Oil's down below $69. At least it was earlier today. It's been dropping. It's been dropping like it's hot. And we've seen plenty of charts over the past couple months point to cheaper oil prices. Here's just a crude versus gold. I wanted to share this chart. Rates. The general consensus is that rates are rolling over. Now, in an environment when rates are rolling over, crude oil, as you can see here, most likely is going to underperform gold. Now, we're already starting to see that happen. So this suggests, the chart here suggests, this ratio suggests that the rates are going to roll over here. Also, wheat. I shared this a couple weeks ago. The big breakdown in wheat, this really caught me off guard. And I actually picked up on this relationship from a podcast that JC had with Connie Brown. And in passing, towards the end of the podcast, this is on Technical Analysis Radio. This is years ago. She mentions in passing the relationship between crude oil and wheat. I was just like, hey, you should check it out. Well, here you go. Couldn't believe how similar these two charts look. How similar
that's weird.
They move
that's
together.
weird. That's weird.
It is. You'll see the differences though. Notice, the bases, like, the 08, 09, 2010, grains, just the bottoming process for grains in general, it's a longer process. It tends to take more time than you see here. These almost V bottom like troughs here in crude oil. Nevertheless, they move together. Wheat has been printing fresh lows over the past couple months. It made sense to me to see crude continue to turn lower, and it has so far. Another data point I like to look at, the crack spread. Now we're looking at crude versus its distillates, right? So 3 barrels of crude oil turn out two barrels of gasoline and a barrel of heating oil. We can think of heating oil as diesel. So what this is telling me, this contracting crack spread, it's actually been rolling over as well here in the near term, is that the demand for the distillates is waning. And if the demand for the distillates is waning, then that likely, again, spills over into the demand for crude oil itself. But heating oil, back below the 2018 highs. And we already mentioned earlier at the top of the show that crude had undercut its former 2018 highs, those prior cycle highs. That's a big level. So this does not bode well for crude. It does not bode well for energy. Now, gasoline's still hanging in there. Right? Gasoline's still hanging in there, but I doubt if crude continues to catch lower, if heating oil continues to trend lower, that gasoline's going to hold those former highs. So what is it for crude oil? What's my level in crude oil? What am I focusing on today? It's 65. Right? It says the 2019. These shelf of former highs going back to 2019 and 2020. Now the former resistance turned into support in 2021 and earlier this year. So that 65 levels on my radar. If and when crude oil undercuts that level, I think the downside is towards 44. So that's what I'm watching now. And that's something definitely to keep on our radar in the coming weeks and months for sure.
We've neglected to mention the entirety of the show. I guess we'll do it now. We like to at least preview or at least say what is upcoming from a macro economic standpoint, because we know that the markets that Ian is discussing are heavily affected by economic data. There is only one macro event that matters right now, and it is the FOMC, the Federal Open Markets Committee's announcement today at 2 p.m. Eastern time, followed by that 2:30 press conference where the market says the Fed will raise rates a quarter point and then maybe say they're done or not. That's the part that's up for debate. And it goes without saying that whatever they say will cause some heavy volatility today. So be aware of that.
Absolutely.
Do you have anything to add there?
No, I mean, that's the important part. I think it was almost 90% Fed funds futures are pricing in almost a 90% chance of a 25 basis point hike. There's really not any disagreement or argument there. It really comes down to what does Powell say afterwards.
Yeah.
So that's what everybody's paying attention to.
For sure. All right. Do we have any final words of wisdom in our final trade segment here?
I keep an eye on the dollar. Keep an eye on the dollar. I still think the dollar is critical to how risk assets react here in the coming weeks and months. Keep an eye on the dollar. Keep an eye on crude. So dollar below 101 is huge for the market. Crude holding above 65. It's a big deal for pro-cyclical assets and just commodities in general. And of course, keep an eye on Dr. Copper. Keep an eye on Freeport McMoran. We didn't talk about Freeport McMoran. Let me pull up a chart real quick of Freeport.
Do it.
The level, I think we're in trouble. We're looking at banks right now. We're looking at IWM with lower bounds of their ranges. Throw Freeport McMoran in that mix. FCX. You see FCX, trending below $25, then we're probably experiencing broad selling across the market.
I had something to add to that, and I don't remember what it was. So never mind. We should mention that Ian's research, all of Ian's charts are available to All-Star Charts premium members. If you want access to Ian's charts on the regular, I don't even know how many reports you're doing at this point every week, but it's a lot. You've got a gold report, you've got a tell me all the reports that you do. The currency report,
gold report, currencies, cover bonds, and also commodities, of course. So 4 reports, 4 decks a week. Yeah, and you can always reach out through info at All-Star Charts.
Yeah,
love to hear from you. Love to have a conversation.
Info at allstarcharts.com is the email. If you want to just go to allstarcharts.com /join yourself, you can do that. And that is how to sign up for the subscription. There should also be a link in the description for you to click on, and that's how you can get Ian's research delivered straight to your inbox every single week. Ian, you and I will be back on Friday for another edition of this show, where we will, of course, will be on the other side of this Fed meeting, and we'll have some more clarity on that front, and we'll see how things shake out between now and then.
I'm looking forward to it. We're gonna have plenty to talk about.
I expect that too. All right, everyone. Have a great rest of your day. Smash that like button. Give me a like. I'd appreciate that. The likes do help. In the eyes of YouTube, the likes help a lot. So we appreciate any and all likes that we get on these videos. And for Ian Culley, head of FICC at All Star Chart, from Spencer Israel. Have a great rest of your day. Catch you guys on Friday.
See you guys.